are a plethora of funds available in the market to invest your hard-earned money in, but which is the right fund for your portfolio? What is the right kind of strategy for any of your financial goal? We answer all of these queries on the show, and today we have Anil Rego, founder CEO Right Horizons, to answer all of those queries. Hi Anil, good evening and welcome to the show. Before I pick up the query, let us also flash our WhatsApp number wherein our viewers can send across their questions. It's 865-797-4571. You can also email us your queries on the money show at etnow.tv. All right, Anil, let's begin. We will take Vinay's question via email, and he is looking at investing 3 lakhs rupees per month. He already has a mutual fund portfolio of 22 lakh and equity portfolio of 1 CR, and he wants to invest for almost 12 to 15 years. He's a very high risk investor as well. So we don't have him on the phone line, otherwise I could have asked him about a mutual fund portfolio that he already has. So just in case, Vinay, if you're hearing us, do send across your mutual fund portfolio, so that next time we can take your question and then get it again checked by our experts. But so far, Anil, whatever information we have, a time horizon for 12 to 15 years and 3 lakhs per month is what he's looking at in terms of SIP.
It's always good to be diversified across different market segments, rather mid-cap segments. And so we have suggested a few options, right from, I should say, blue chip fund can be one option to create a bit of a base for it as a large cap, and then have multi-cap like a Nippon India multi-cap fund on the mid-cap. And of course, we can also have on the flexi-cap side, say a HDFC flexi-cap. Mid-cap we can have through a HDFC mid-cap opportunities fund, and the small cap, we can look at a quant small cap fund. So I think a combination of these, doing an SIP across various categories, will find at different points of time, maybe a large cap could come back right now. Mid and small caps have been doing well and possibly continue to do that. The flexi cap will also try and balance between the two, and the fund manager then takes a call and balances rather than have a fixed allocation. So I think a combination of this is what will take care of him for the long term.
So Anil, let me just cross-check the recommendation that you've given. So you've recommended a mid-cap, a multi-cap, a flexi-cap, and a blue chip also, right? And a small cap. Okay.
Now
any
proportion,
sure.
Yeah, the proportion can
because I was
also
just wondering, I was just wondering that is it important to have a flexi cap and a multi cap? Can he just have a flexi cap, or maybe if he's having a large cap active exposure, where I don't know if you suggest he can even look at a passive fund in terms of large cap exposure is concerned. But HDFC flexi cap, I think, is more a large cap biased fund in terms of this category. So can he just look at a multi-cap and not a flexi-cap? I mean, just trying to understand your selection of funds and the way you are strategizing it.
Yeah, so since we didn't have a current portfolio from him, one
True.
a slightly wider spread for him to look at. Yes, my point I was making also is, one is the percentages can vary depending on his appetite. And the second is, also, you can choose between a flexi and a multi-cap. And for a higher risk profile, you can go for a multi-cap rather than a flexi-cap, okay, because that also has a mid and small caps as well. So that is something which one can look at. But if there's no other assets, and if a lot of it is only equity, and high risk based on his current investments, then I think people miss out the need for having some of it a little lower risk, right, within equity itself, so that and also keeping in mind that markets also are dynamic, and you may find sometimes mid cap and small caps do well, and the action then moves on to large caps.
All right, Anil, let's move on to our next viewer. Mr. Sukumar is on the phone line with us. Good evening. How are you doing today?
I'm fine. Yeah, how about you?
And you have a SIP of 10,000 going on in a couple of funds. I'll just read out the names once again. It's Nippon India Small Cap. You have Zerodha
Yes.
Nifty 250 ELSS. You have Zerodha Nifty
Yes.
250 as well. And
Yes.
you want to repay your loan of 70 lakh, which is why you have this portfolio and you want to accumulate
Yeah.
that amount through this investment. Currently, you have the market value of 15 lakh in this portfolio. Is it right?
Yes. Yes. Yes.
Okay, perfect. So, are you willing to increase your SIP amount?
There to increase, and I have recently, yesterday, I just bought a Mahindra Manulife manufacturing firm of 1 lakh. So for a period of 2 years, so I would just
Some
want to
investment.
make
That's a lump sum investment you've done. One
lump sum.
lakh.
Yeah, yeah, lump sum one.
Anyone recommended that to you?
Yes.
Oh, okay, okay. All right. I think in terms of picking up the theme and the sector, it's not a wrong timing, although. But let Anil elaborate more on that, and he will also cross-check your portfolio. What's the time horizon to pay off this entire loan that you're looking at?
Yes.
What's the time horizon, the investment time horizon?
10, 10 years max.
10 years. Okay, perfect,
Yeah.
perfect. All right. Anil, yeah, okay. Anil?
So, yeah. First of all, I think when you're looking at a sectoral fund like a manufacturing one, you need to keep in mind that we should also be, able to track sectors, and then timing of sectors entry and exit will become important. So, just keep that in mind. However, at this point of time, I think manufacturing, in our view, also is likely to do well. So it's not a bad fund to hold through for, let's say, about a 3-year perspective or so. But keep watching it, and accordingly, if things deteriorate, it may make sense for you to move to a diversified equity fund, right? Uh, Now, from the funds that you have, right from the ELSS as well as the Zero Nifty 250 that you have, and the Nippon India Small Cap Fund. Our view is maybe the Nippon India Small Cap Fund definitely is something that one can continue with. The ELSS and of Zerodha as well as the Nifty 250 of Zerodha. I think you need to keep it on watch because it does not have such a long-term track record. Of course, the Nifty 250 is I mean, still one. So to that extent, you will be in line with the index. I would have preferred maybe, the Zero Nifty 250, which is not the LSS, to look at a more diversified equity fund. Now, in terms of recommendations that you also requested for, the future and for you to build up your assets to be able to repay a 70 lakh home loan. Uh, Apart from the Nippon India Small Cap Fund, I think you can also look at a mid cap in, say, a quant mid cap. Uh, you can also, it depends on if you want some comfort, if you want some thing which is not necessarily debt, but lower risk, then I would even say you look at a balanced advantage fund, but that's more for liquidity, which you can keep out there in case, say, market conditions deteriorate. But other than that, you can also add up to, let's say, a multi-cap through even the Nippon itself, Nippon and a multi-cap, and HDFC small cap is something that you can look at to add in this. I'm assuming that you are a high risk appetite, and accordingly, you want to grow it faster over this period so that you can repay your loan quickly. One kept that in mind, keeping in mind, what is your current investments that you have. So I think the way to do it is as and when you see a good spurt, in your any some of these funds, and they've delivered a good return, it will make sense to also, in a phased manner, as a bit of a profit booking, to go and repay your loan in some form. And when you repay your loan, you can even go back and increase that through an SIP. So,
Sure.
you're not
Yeah.
missing out on the market.
All right, all right. I have Suresh Kumar also on the phone line with me, but then Mr. Kumar, you want to ask anything else to Anil, or can I just move on to my next viewer?
No, I just want to ask one thing. Is there any which one would be best to retain for another 10 years to the funds that I can have in my portfolio?
Sure. Anil, were you
Yeah.
able to hear the question? Yeah.
No, it's not very clear, but from what I can understand, some of the suggestions that one gave, I think you're looking at for the 10-year basis. Uh, you can look at a combination of, let's say, the Nippon India multi-cap, which I suggested. You yourself have the small cap of it as well. And, the quant mid-cap, HDFC small cap. These are the
So,
options
Kumar,
that
I
you
would
can
request you to
look
log
at.
on to our channel's YouTube, and maybe over there you can note down the name of the funds once again. Thank you so much for sending across your question. I have Mr. Suresh Kumar on the phone line with me from Kerala. How are you doing, sir? Good evening.
Good evening. I'm fine, doing fine.
Is it raining there?
No, not yet.
No, it's
From 2 days
not.
it's not
Oh,
running.
we've been
No, no,
reporting
no.
heavy rains in Kerala and Karnataka. Oh, it doesn't seem to be happening
At
that
least
way
in
then.
my place it is. At least in my place it is not raining.
Oh,
After that
we were
Bay of
just so
Bengal issue.
hopeful. Oh, we were just so
No,
hopeful that we might just get those dark clouds, at least that.
only only there is dark clouds but no rain.
All right. Hopefully, it should happen in a couple of days. But then, let's talk about your investment portfolio. You are planning to invest 10 lakhs in mutual funds for a longer time horizon, and also
Right.
withdraw money from time to time. So, I wanted to understand for how long is this investment period, and what is the time frame of doing an SWP or taking the money out for expenses? Any idea on the time frame, sir?
See, I will let the funds grow as it grow, and I am not planning to withdraw those funds, but I am planning to meet my expenses through the benefits from the
Sure.
fund. That is
Can
my
I say you have a
lookout.
time horizon, you have an investment time horizon where you will allow the money to grow for at least 5 years or 10 years? Is that the case?
At present, after 5 years, I have not calculated anything, but minimum up
Sure.
to 5 years, if there is a good
All
return,
right.
if I get a good
Okay.
return in mutual funds, I see 50% return, 70%, 80% return per year. If that goes on,
Oh,
then I don't have any worry. I will keep it as long as it go on. Okay. I want to make my expenses through that. It is possible.
oh.
If I invest in that, I can meet my expenses surely through that.
All right. I think we all want 70 to 80% return from our mutual funds, but then I don't think so. Anil would really agree to that. In fact, he'll give you a rationale on this expectation as well. But then you also want to inquire about few funds, which is Motilal Oswal S&P BSE Enhanced Value ETF, ICICI Pro Nifty
Yes.
200 Momentum 30 ETF for investments,
Okay,
right?
that
Have
is
you
what I am
invested in
coming
these
across,
funds?
giving good return.
Yeah, exactly. Okay. So I just wanted to understand your investor profile, sir. Are you retired or you'll be retiring in a few years' time? Is that the case?
Actually, I am not retired, but
Okay.
I am at home at present. I was overseas.
Sure.
Okay, so
Okay, okay,
after
okay.
Corona, I have come back, but the full-fledged,
Okay.
I am in the share market. My age
Sure.
is around 53 age.
Okay.
Okay,
Sir,
so I'm
what I can understand is you cannot take much of risk with this money. Is that right? With 10 lakhs, you are not ready to take a lot of risk.
no, I'm having the other portfolios as well at present. Not so much big funds, 5 to 6 lakhs, and
It is a
also
mutual
I'm
fund
doing
portfolio or a stock portfolio, sir?
in the mutual fund.
You
I'm
already
having
have mutual
HDFC.
funds. Okay.
Yeah, HDFC small cap fund, Kotak small cap
I
fund,
will just
Quant
note that.
small cap fund.
Can you just go slow? I'm just noting that down because what happens is it would have been good if you gave us this information earlier. Our guest would have those funds name as well. But HDFC top 100, ICICI,
HDFC small cap fund. Okay.
HDFC small cap. Okay, and
Okay. Kotak small cap fund
Kotak small cap also you have. Okay,
and Quant small cap fund.
only small caps.
Yeah, at present, only
Because
after
you saw the
not a
small caps
huge amount.
booming, you got all small cap funds. Is it?
That is SIP. I have done SIP in all these places.
Sure, sure. And you've been doing this since how long? What's the SIP amount?
No, the total SIP I have invested in is 2,87,000. I put sometime bulk amount into that. I'm in profit at 23% as on
What
current
is the
date.
total invested amount in these funds?
2,90,000.
2 lakh 90. This
Yeah,
is going
not
via
20%.
SIP. All right, so
It is
let's
going
begin
to.
your financial. Okay, so let's connect with Anil now. So, Anil, you've got the case really clear now. He has a mutual fund portfolio, three small caps, invested amount 2 lakh 90,000, 10 lakh rupees he wants to put. For approximately 5 years, he let it grow, and then he wants that money on 70 to 80% profit for his regular income. Okay, so you are going to help him derive that kind of a return. Even I'm really curious to know the strategy for this now.
Yes, I can only say that if somebody, is able to get 50 to 70%, I will be happy to invest with them. Okay. So, yeah, so unfortunately, that's not how markets are. Yes, there are periods when it does well, and I think that's something that one would like to tell Mr. Suresh Kumar that markets are cyclical, and interestingly, whatever goes up very fast also ends up coming down fast. So whenever there's a correction, so that's something that you need to keep in mind, which is why having all your money in small caps, when these that cycle ends is going to be really painful for anybody holding the small cap exposure. If you go back and see history, you may find small caps do very well, but it's not unusual to see a negative of something like 25 to 40%. In the larger caps, the percentage may be lower. You see, say, 40, 50% fall only at extreme points, whereas in small caps, especially, they come much more often. So that's something to keep in mind. And I would definitely suggest him to diversify beyond small caps. Some of the options that he's asked for, one is Motilal Oswal, the S&P BSC Enhanced Value Fund. That's a very high risk fund as well. In fact, it has very high concentration as well. The top three sectors contribute almost like 86%. So that is something that you keep in mind that it's a very concentrated fund. And a high risk one. And I would believe something like this you should do only if you have a high risk profile. Uh, but keeping in mind that you already have a lot of these high risk ones, or I would suggest maybe to hold off, and even if you do, to do it in a phased manner. And the other one is, the Nifty ICICI Pro Nifty 200 Momentum 30 ETF. Again, it's not surprising. I think he's looked at the higher return options and the funds that have been giving higher return options. Yes, they may be very attractive at this point of time, but because momentum is doing well. But again, the point one is making is momentum is doing well in the current market condition, and you may just see that over a period it may, if it cools off, you may see a larger fall as well. So I think you need to relook at your risk profile, and ideally, I would think for the situation you're in, it may make sense to consult a financial planner and help understand your risk profile better, and also suggest options for you. That's my suggestion for you. Or you typically find you do very well for some time, and you lose it all. So that's something to be wary of, because what goes up fast also comes down fast.
Right. Is there anything else you want to ask Anil, Mr. Suresh?
No, actually, what my lookout was, at least the market will have the same trend 2 to 3 years of time of Modi regime. Okay, so I'm expecting these returns to continue at least for 2 to 3 years. So after that, if I
Well,
get
no
a
one
lot
can
of
actually, yeah, no one can actually predict the markets, but then we all hope that this underlying bull trend stays for a longer period of time, and of having a good period of time for 5 years. In that anticipation, you should be building your portfolio as well. But then, Anil, any last words for him?
Yeah, so I'll just go back to history. There was a period when in 2016 and after 2017, you had a large fall in small caps and mid caps, and the large caps did very well. So what could happen is, yes, the market may go up, but it did not mean all the time mid and small caps will go up. So from that standpoint, I think if that situation happens, you will be really feeling bad about it that, the market went up, but still my portfolio didn't go, which is why I think some diversification will help.
All right, let's slip into a quick break on that note. I have other viewers also waiting on the phone line, and let's reconnect post that, and let's continue the question answer session on the show today.
Even Einstein's theorem seems like WhatsApp messages to me. Then how could I get defrauded by someone pretending to be my friend on WhatsApp video call for 40,000 rupees?
This can happen to anyone. With the AI deepfake, anyone can trick you by imitating a close friend or family member's voice or their look. Pehchan Kaun, issued in public interest by Bank of Baroda.
New Seltos diesel manual. Tech is now badass.
Kia, movement that inspires.
PhonePe proudly presents Share.Market app and website. Zero brokerage on cash delivery, intraday, F&O, zero account opening fees. Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.
Welcome back. You're watching The Money Show, and let's continue our viewers' question. I have Anil Rego with me answering all the queries today. Anil, let's take Shatrughan Sharma's question. He wants to understand if it is good to subscribe to a NFO or observing the performance and then later on having it in the portfolio place. He's a seasoned investor, 60:40 split between direct equity stocks and mutual funds. He wants your suggestion, recommendation of investing in a NFO, the timing to have that in your portfolio.
So I think in most cases it's better to look at an existing fund because the existing fund also has a track record, and you can see the performance. The fund manager. You know the risk profile of it. So I think an existing fund is always far better to invest than an NFO. NFOs in our view can be looked at on a very selective basis, and only if it fits into your requirement. Sometimes you may find it for, let's say, a new theme that comes out. I'll just give an example. At some point, silver came out, as an NF1 that so those funds were not there as an option, right? And so then NFO is not a bad idea if you want to look at silver funds, for example, right? So be very selective, but I think broadly it makes sense to use an existing fund.
Sure. Let's move on to our next question, which is from Mr. Ritesh, and he would like to know best investment options for a short period of time, which is at least 2 years.
Yes. So the issue that you have when you're looking at a short-term requirement, of course, 2 years is not really short, because if let's say 1 year, I would have said just look at a debt fund. If you're looking at, let's say, somewhere around 2 years, then you can even look at an equity savings fund. Apart from a debt fund, maybe you can, have part of your portfolio into higher risk, or even just an equity savings fund, which you can look at. And you can, let's say, do, for example, a conservative HDFC, equity savings. And on the other hand, if you had a period and outlook which is slightly longer, maybe say closer to 3 years, then I would even say the balance advantage category, is a good category to have. You can either look at, HDFC, the BAS fund there, or you can also look at the ICICI balance advantage. So one of these are options that you can look at a little bit based on risk profile. But if it's a very important need, then I would say, you should prioritize risk over return. And even if you have a lower risk, for this part of your money, keep it little lower risk, but take risk maybe for other requirements of yours.
All right, with that, it's a wrap on the show, and that's all we have from our viewers in terms of questions. Thank you so much, Anil, for being on the show and helping our viewers with those portfolio queries. And I'm going to leave our viewers with our WhatsApp number and email ID. 8657974571 is the number where you can send across your questions, and you can also email us your questions on the moneyshow@etnow.tv. Thank you so much for watching. Goodbye.